Welcome everyone to episode 4 of Following the Money, a technical trader's outlook. I want to get started on oil stocks first. I've got a disclaimer I've got to get through first. These are purely just my own opinions and my own thoughts on the market. It's not to be considered as advice or trading recommendations. Do your own research. You're accountable for your own trading and your own losses. Now, oil stocks. Crude oil has been doing very well the past couple of weeks. What's really caused it to do well this week is there was a recent attack on a few US military personnel from Iran, causing further instability in the Middle East, which is where all the oil comes from. Whenever this happens, the price of oil tends to go up. And like I mentioned a few of the other weeks, a lot of the US oil stocks, the pipeline stocks, were already starting to base and do well, and now they're starting to break out. I've got one up on the screen now, for example, VMC. I've got this area shaded above here in purple. This is typically where supply would come in. It's where it was unable to break out into all-time highs. And we have a fake out right here that I've just highlighted. What this is where you've got, okay, here's a resistance. Everyone's looking to buy it if it breaks out, and it immediately fades and heads lower. This happens all the time, but if you look at a lot of the other oil stocks, they're all doing pretty well at the moment, so it's likely that this trend may continue to the upside. The reason why I've highlighted this purple area here is, will you imagine if you were someone who bought on the breakout here, your stop loss is probably going to be down here. It's likely the institutions that are hunting for liquidity may fade this area here. So what I'm watching is if I get some sort of a fade movement where it strikes down, hits this area, and then comes right back up, well, I may look to trade this particular stock if it does that. A few other oil names, so I've got PARR. It's still basing here, but it's closed at its highs here, unlike the other stock, which got faded and headed lower. Also got PAA. This one's managed to break out of that base and is closed on its highs as well. If you were to go and look at most of the oil stocks, whether it's in Australia, but particularly America, they're all doing quite well at the moment. So it's likely that with VMC, what I showed before, if it does fade that area, it's probably likely it's going to break out and continue to the upside as well. Lastly, on oil stocks, we've got PSX, which is closed on its highs as well. Very strong indicator for this sector. I've got AD8 on the screen now. This is why you've got to continue to watch the market leaders. In Australia, this stock is by far one of the market leaders at the moment, continually growing its revenue. I've traded it pretty much the whole way. Got a very nice strong base here, formed here, pivot point here, broke out, formed another base here. This is the supply distribution area. You can see every time price came up here, it was faded to the downside until it broke out of it. But again, you've got to keep watching these areas because look, it's faded it, and that's where demands come in and push to higher. So if you were buying on the breakout here, like myself, you're watching these areas here to accumulate. It's broken out again. Again, this area here where supply was typically come in, it fades this area here. And now it looks like it's doing the same. So I'm watching this, potentially even adding to this stock. That's 88 on the ASX. Next up, I've got IoT listed on the New York Stock Exchange. It's been a leader, it's been in an uptrend, and you've got a clear breakout here to the upside. It actually gapped out on an earnings announcement. So clearly a lot of demand from institutions to get involved. Here's a distribution area that I've highlighted. I've kept it there on the screen. It's consolidated since pulled back to its moving averages. I'm going to continue watching this distribution area. Now, you've got a breakout here, but it's immediately faded. So imagine you're someone who bought on this breakout here. Your stop losses are probably going to be somewhere around here. I'm going to be watching this distribution area because, again, like the stock that I showed you before, the oil stock, if it does fade this area, I'm going to be looking to trade this particular stock. I've got PNV on the chart now. I discussed this in last week. Again, I mentioned how we've got an inverse head and shoulders pattern, a typical stage 1 accumulation pattern. Again, left shoulder here, awesome oscillator makes a new low. We've got the head here. The awesome oscillator does not make a new low. It makes a higher low. And then we've got the right shoulder and a breakout. And I'm waiting, I've left this up on there. I'm waiting for a consolidation like this that I can potentially trade. And if I go down on a smaller time frame, you can see that it is doing something like that. So this has probably got another week or two to it, but just keep watching this one going forward. ACE on the screen here. This is a typical IPO base. It's still basing, got a nice pivot point here. I'm watching this. If I recall, I think it's doing quite well financially as well. Yeah, look at that. So every year that it's been listed, it's managed to grow its revenue quite a lot. It's likely that if it breaks out to the highest here, there will be a fair bit of demand for it. So I'm going to be watching it. Although the liquidity, it's only 100 mil market cap stock. So if you are playing around with any decent amount of funds, it's going to be very hard to get into this particular stock. MPC, another oil stock listed on the American stock exchanges. Probably should have shown this before, but it's here now. As mentioned, it's managed to break out and it's closed on its highs, adding to my argument before that with that particular stock, VMC, if it does fade that distribution area, may potentially be one to watch. I've got CALM on the charts now. Again, typical stage 1 accumulation base. Left shoulder here, head and right shoulder here. Even the osculator shows a bullish divergence as well, which is great. And now it's forming a base here as well. Now, if you look at this, this is actually a head and shoulders pattern as well. You've got the left shoulder, the head, and the right shoulder. And the osculator doesn't have a divergence on this one, unfortunately. But you imagine this is typical distribution, all this whipsaw price action, and then the gap down to the downside. Now, I don't know for certain, but it's pretty likely there's a lot of trapped buyers in here. And what that means is that all the people who bought within this distribution area here and then it immediately headed to the downside are likely still holding on, waiting for price to get the break even before they close out on their position. That sentiment will be expressed in the orders within this price range here. And a lot of the institutions would probably likely know that or see that even. And that's why you tend to see these cheap bases form here to suck that liquidity in. Why would I want to buy up here at these prices? Why would I want to accumulate at these prices when I can get those impatient sellers to basically sell their shares at a much lower price here? The longer this base is here, the stronger it is, because that means more, if it goes for longer, people are going to get more and more impatient and then, okay, screw it, I'm not selling here, I'll just sell here, right? And that's why these cheap bases tend to work quite well, because when they do finally break out, there's no sellers, there's no supply looking to dump on that liquidity. GTHX on the screen now, it's finally broken out and headed to the upside. It looks very, again, I mentioned this in last week's video, it looks very similar to the uranium stock WSTRF, which broke out earlier. Very similar base, broke out, but it did manage to pull back to its 21-day moving averages, and I'll be watching both. So we might be able to see into the future with this one. Will it pull back to its 21-day moving average like the other stock? Potentially, but I'll be watching both. REKR on the screen now, REKR. Look at this, very nice base. So you've got a base formed here as well. I'll put it on the screen. Got one there. I can see the pivot point already there. Let me see if there's any other ones. No, but this was a nice base. It's pulled up here. Again, you've got probably trap buyers here looking to sell their order, forming a cheap base here. If there's any sort of pivot point formed in here, I'll likely look to trade this one potentially. And I believe the financials are doing well also. Look at that, every quarter growing its revenue, every year growing its revenue. Very nice. It's likely there's probably going to be a lot of demand to get involved in this stock. I've got GLOB on the chart now, or GLOB. I've got the weekly chart up. You can see this distribution area here, this supply area, and that's been active since 2022. So 2 years, every time prices come up this area, it's faded it. You had a fake out here. If I go down onto the daily, you can see it's basing right on that distribution area, and you've got a pivot point forming. So this area here, let's go down to the 4-hour chart. So this price point here has been tested many times, which is the distribution area, which was shaded before. And as price comes up, the volume comes up, as you can see, and as it pulls back, the volume drops off. If it does break out of this area here, I will be looking to potentially trade it, and I know the financials are doing well also. Look at that, every quarter growing its revenue, every year growing its revenue. It's done 1.7 billion in revenue. Is it profitable? Yeah, it is. 150 million in net profits. It's got a market cap of 10 billion. There's probably more to know about this company. Again, I'm certainly not an expert on it, but if it does break out of this area here, I potentially will be looking to trade it. Next up, Rhythm RYTM, trading at all-time highs at the moment. Did have a recent fade here as well, which is concerning. There'll be a lot of trapped buyers in this price area now. I go down to the daily, you can see a very nice tradable base here. Headed to the upside, hasn't even gone lower than its 21-day moving average until recently. Hasn't been able to get below the 50-day. Clearly a lot of demand for this particular stock. If I go down to the 4-hour chart, let's have a bit of a look. So similar to before, you know how on the weekly, I'll go to the weekly now, I said that there would likely be a lot of trapped buyers in here, because again, it keeps going up and up and up. There's probably a lot of hype about this stock, and then dumps down and goes a lot lower. And how much lower did it go? So if you bought around here, for example, it went down 20%, more than 20% in about 2 weeks. So all those people who bought in around here, again, we've all been in that position before where you go, okay, I'll sell it, but if it goes to break even, I'll wait for that point. And all those orders are going to be in the system, and it's likely the institutions who move the market can probably see that. So you'll probably see a cheap base formed around here in this highlighted area, and it will base a bit, and any sort of pivot point and breakout that I see, I will look to trade this particular stock. Next stock I want to cover is RDX. Stock has been in a very nice uptrend. Look at this base here. I'll go on the weekly to see if I can see anything else. No, so sitting around a distribution area now. This stock has still got a long way to go before you could call it, I guess, a market leader. It is sitting at a very strong resistance level at the moment. It may look to even fade this area. But if I go on the daily again, it looks like a high tight flag forming. I'll go on a smaller time frame to see it a bit better. And it's only managed to pull back about 15%. So this technically would be considered a high tight flag. And here it looks like a pivot point is forming because as prices come up, the volume's gone up. So you really would just be looking for a breakout of this price area here, and it would be a very tight stop loss as well. This would be a short-term trade though. You wouldn't be buying this to hold on to it for the next couple of months because it does need to correct at some point. It's very extended from its 50-day. But if you are looking for those short-term swing trades, these are the kind of stocks that you want to be watching. Flux Power Holdings is the next stock I want to have a look at. Very low market cap stock. I've got this shaded area here. This is where supply comes in and pushes price lower. And like some of the other charts I've had a look at, we've got a cheat base forming. Not much to really say about it for now, but I will be watching any sort of pivot points I may trade. Next chart I want to have a look at is GLBE. This company originally got my interest because of its financials. It's growing its revenue by quite a lot. Have a look at on the annual basis, consistently growing its revenue. These are the kind of stocks that I want to be trading. And I've got a distribution area shaded on the chart. So look at every time price comes up to this level, you've got 1, 2, 3, 4, it gets faded. Eventually, once all that supply has been absorbed, it does tend to be clear skies. If I get a tight pivot point formed around this area and then a breakout, those are the kind of breakouts that I really like to trade. So I'll be watching this one very closely. And the last stock I want to look at is Expedia, EXPE. I've got a stage 1 accumulation base formed here as well, which is a great sign. If you see a stage 1 accumulation base formed before your minor corrections here in an uptrend that you want to trade, this shows you that there's been some actual accumulation of the stock, and therefore if it does pull out and then break out, there's likely going to be more support and demand to actually get involved in the stock to push it higher, which is what you want if you're a trader. You can see the left shoulder here, the awesome oscillator makes a new low. You can see the head here, the awesome oscillator makes a higher low, and then you've got the right shoulder here, a very small pivot point here, which is very nice. Price goes up, the volume goes up, pulls back, the volume dies off, and then it breaks out and the volume picks up. Very good signs, and then you're getting a nice high tight flag base forming before, similar to what I showed before. When it pulled back, I think it would have done quite, so only 7%. This is definitely a high tight flag. If I go down to a smaller time frame, you can see a pivot point forming here. Again, as price comes up, the volume goes up. As it pulls back, the volume dies off massively. If you do get a nice strong break out of this, these are one of those short-term swing trades that you can add to your watch list, and I'll be watching it very closely. That's all I wanted to discuss. If there's any stocks that you want me to cover, let me know. Any other asset classes you want me to cover, let me know. Or income statements, let me know. Happy to go through it. Put it in the comments. Thank you.